Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, you know what? Market volatility is persisting. Volume is picking up, except for obviously today. And, you know, the correction's getting a little deeper. You know, everyone wanted a test of the 200-day, or everyone wanted a spike in the VIX and some correction down to perhaps 10%. And even the bulls were saying it's healthy. So let's see if people are going to start stepping up and playing ball. You know, I know for me, I've been pretty much trying to be out of the way, measuring the market and taking trades, and I've been in tactical mode since we broke below the 8 and 21 day. So there are people out there that have been saying we're going to correct, the market's going to crash, and they've been saying this for multiple years, making a guess, having an opinion without the market confirming it. What we do as traders, since we have to make money every day, we have to have a P&L, we have to have different approaches in order to make a living. You know, we have to measure the composure. So I want to do a quick little play-by-play on things that transpired and things that took place that could have helped you make money both ways, because we've been talking about the little small RDR tactic as well as the H sell setup pattern. So if you wanted to be long for quick little bounces versus levels and measuring commitment, or you know, shorting a bounce and then adding to it, trading through a previous low for momentum move down. And you know, there's actually a lot of different ways to, you know, skin a cat, especially if it just bounces and it's still dead. But anyway, doesn't back. Anyway, let's just go into the chart of the SPX, and I just want to go over a few things. So, okay, coming into, okay, just say the Alibaba IPO, okay, which was right around here. You know, you had that quick move to make new highs. When typically you make a new high, you hold above it, you have follow through. You don't quickly break above it and then close below the 8 and 21 day. Okay, and then another signal usually that some weakness is setting in, obviously, is when you look at the Russell, the XLE, the OYHs, and tech, and everything was very faulty then. So this chart, if you go back to September 22nd, was posted on my Twitter saying these are a few things to take notice. So you get a little tactical, you take a little notice. Then what transpires? Okay, you then have a quick move to the bottom end of the range. If there was any commitment to it, it should have held around here. And then what happened? You have this support going sideways. Okay, so this is your next level to say, how do we handle the 50-day? We bounced off it the first time. Usually you don't bounce off it the you know, sometimes the second time, but typically not the second or third time. So then you had boom, right there. If you were trying to, or just say you played a bounce this day, once you didn't hold the top third of it or half, you got out of the way, and people who were saying, I'm going to short a bounce because you know, this time is different, you had your little H cell set up right here. Okay, this is your pole. This is your reflex rally up where you could have shorted into strength if that's what you do, and then you added once it broke the level, and that's the bottom of the H. That's your H pattern sell setup. So first time in a while you broke below the 50-day with, you know, pretty harsh. Then you remember we had that back and forth engulfing days. This one pushed back the bears a little bit because it took back a half, and then you had another retest of this area, and it was trying to get back above the 50-day, and then, you know, right there for the first time it got rejected at the 50-day, didn't reclaim this support going sideways, and you know, things felt different. You know, I'm not looking at all the other sectors now to overlay it, but I'm just trying to give you the cocktail napkin play-by-play. Then what happened? Boom, another wide range breakout to the downside. Okay, so again, if you now want to expand your H sell setup from here, okay, and you want to make it down to below here, and then the bounce up into the 50-day moving average, that is where probably bigger market participants are selling into the 50-day and then adding once you break the bottom of the H again. Okay, so that is the bigger type of trade if that's what you were doing. But if you also remember, I talked about this level here as being, you know, one of the levels that if it broke below, okay, you know, I think this was from the start of the year, we were then breaking one of the trends. Okay, this was one of the trends. This was a more micro trend. This was the trend I was measuring from the correction from the 2014 low, which was this year. So it broke below. So the question was, would it engulf it and be a trap to, you know, get people out of their longs and get people short? Maybe. So the question is, kind of stay below the 50-day, but this was another break and another sign that we were heading lower. Then you had, you know, further downside, and that was your 150-day. So the first time you get to a moving average, just like the first time we got to the 50-day, you bounce, it was worth a try. And then that's when you had your red dog reversal. And this rally was into the jobs number, was fast and furious. And if you shorted down here and you chased it down, you probably got squeezed back up because remember that 3-day move? Okay, it was pretty fast, pretty furious, but what happened here? It got rejected again. Let's make it bigger. Got rejected at the, what was this? The 50-day right there. So right there, you had your reflex move, pretty oversold from here. Had your red drug reversal. Remember that was 1941. You write down 1926 to 150-day, 3-day move. So even if we were, even if you were very bullish and thinking that we continue, why not take some of the trade into the 3rd day into resistance? Because I remember I was long here, sold into this, and some people were like, I'm re-shorting this. You kidding me? It's a gift. They got the 50-day. I was like, all right, good luck. And then what'd you have here? You had this prior low. So if it was going to continue to the downside, I would have had a break below that. And then boom, look at the fear, like the force of this down move engulfing this entire thing. So, if you were out of it, if you sold into the 3rd day, or if you had a trailer on, because I think I had a trailer on, once we broke below this low, you got out of the way. Okay, and then what do we do here? You had your 1-day double bottom, great trade if you were looking for it. And again, if you pressed here on the short side, who knows if you stayed with it. This was your low, that's 1934. And then into this, if you were in it, I know I was thinking, wow, maybe that was it. Maybe they were just messing with everyone and they threw everyone out of this trend line. Look at the size of this bar. What would it have to do? It would have to hold the top third or top half in order to show some friggin' commitment to this action. Did that happen? No. Look at the size of that bar. It just took everyone out to the cleaners if you were in long. And then if you happen to cover into this, you know what? It's like, what do I do now? So here you are. Only points of reference we had, 1925. So if you happen to still be long, or if you were looking for a bigger, short area on Friday, for the first time we didn't hold 1925, and you had that move down, pow. Another big H cell setup if you go like this and you draw this entire way into the trend. And again, now remember that chart? I'm like, we've been on the right side, okay, of this trend line for a while, okay, right here. And that's something we haven't been able to do in a long time, is stay on the right side of a trend line. And this is, look at it here, boom. We stayed on the right side. That means sellers were still in control. Usually in the last 2 years, it engulfed it and squeezed everyone trying to short a bounce. This time, you got paid for reshorting a bounce. Then you had this, and then we came in today saying, okay, what's next? How do we handle the 200-day? How do we handle Friday's low? I came in flat. Tried to do a little bit of a trade off the 200-day, a little trade off the low. Okay, at 1906, it was very feeble. If you come back to me, right around 11:30, it tried, and I got a little long that. I got a little long the Russell, and then I kept my stops tight because I wanted to measure the commitment to it, which I'll start breaking it down into a little bit more micro, because it just didn't feel like it had the power. High beta was still weak, and the airlines were getting thrown out the window, and I was like, you know what, I'll rent the trade, and actually made some money with it. Obviously, it would have been better to flip short, but anyway, you go now to the chart, and that happened. So now we are comfortably below the 200-day moving average, okay? Comfortable, or not comfortable, it's 1 day, so how comfortable are we? But, you go like this, let's go to the weekly chart, and, this now from here, okay, from this low, we are on the right side, okay? So let's just go like this. This is one trend line which we're below. Then if you go to the 2011 low, that takes you up probably somewhere into 1800, which is right about the 10% correction. So people are like, what's your next point of reference? Just real quickly, you have like 186, and then really this is your next spot coming into 181. So we're kind of in a little bit of no man's land. We broke the active trend, we broke this intermediate trend, and we're above the 2011 trend, which, by the way, Germany broke below. So with that said, you go back to the daily chart. Okay, what do I mean by how long we spend below the 200-day? Because right now we're below the 200-day. When the EWG, which was a proxy for Germany, broke below, the 200-day, we talked about, is there real selling there? Because not everyone could see a false breakout like you had here with an island top. Not everyone gets out when you break intermediate trend and break below the 21-day. Most institutions want to see how you react around the 200-day. And for a few sessions, okay, let's make this bigger, right in here, it traded around the 200-day. Okay, broke below, came back above, broke below, stayed below, and then selling persisted. And if you remember, we tried to take advantage of a little bit of a bounce because it was really oversold, down like 11, 12% from the highs. I think we made a little bit of money, but then again, you take a look at the 6-week bear flag here in the DAX and Germany, boom, below the 200-day, now reclaiming the 200-day, that gave some signs that there was real weakness in Europe, and then boom, to the downside. And now, look at it's just, there's a lot of ways to make adjustments there. Here's you go into the dictionary and say, let me see a bear flag, it'll show you this. Not with EWG, but anything. But anyway, now here, this is how far down we are. So take it a step further. Let's go to the spiders, okay, which is what I was trading today somewhat. Again, you could almost see apparently when this trend broke, okay, right here. And then we stayed on the right side of that trend besides this upper trend. Remember, this is, look at this. This is where we broke the 8-21 day. If you got out of portfolio approach right here, you don't care about what's going on here, and hopefully maybe you're trading from a net short position, which I haven't been, but I've been a lot more tactical, but we'll see. So here is the move below this. So now, if you happen to have been trying to play a bounce, which I was trying to play a bounce, but I was doing it very precisely, my out was when we broke back to the downside. So let me show you what the intraday H cell setup looks like. You go to your 5-minute chart, and you will see in the spiders, okay, this was a few things here, okay. First things first, look where we broke down from here, okay. This was the 2 o'clock pennant from Friday. So coming into today, I actually wrote down a little bit of levels. I'm like, if we were to be really weak, we would probably fail at resistance 1, okay, somewhere around here. I think this was resistance 2. And then I wrote down this is the line into sell resistance 3. So if you wanted to play a bounce, maybe you play to resistance 1, little oversold bounce or higher. If you want to short a bounce with the H cell setup, maybe, don't start here because it could push the envelope a little bit more, but just know where resistance 1, 2, and 3 are. So if this is your pole, okay, and this is, look at this, this is what your H looks like. You can even go higher, lowercase. Into that, you could have shorted the strength. Okay, I actually made money this way. I bought a little bit off the low. You had to first move that broke above this descending little channel here, went sideways. I think I added right in here, sold some strength, and then I said, what's going to happen next? Okay, I need to have stops because who knows if this continues. Everything's not really rallying. We're broken, blah, blah, blah. So you draw your ascending channel. So this is your descending channel where you had your first move up, second move into resistance 1, and then right here, it left the virtual trade floor when it broke 190. I'm like, you know what? I'm not showing any commitment here. I did the same thing, I think, on Friday, where I played this little rally up into resistance, sold it, and unfortunately, I just didn't flip short where the bigger money trade was. But anyway, if you played the rally, you could have got out once it broke 190. And if you said, I'm going to short the rally into resistance 1, all of a sudden, the H started to set up. Okay, so now what does that look like? So now you have your pole, rally it back, short some, and then some would come in and short when we break the morning low, because that's where people play stops if they were trying to play a bounce. Then look what happened when we broke the morning low. You had your downside follow through. So short resistance, short the prior low, and then there is your follow through into the close. So that's your H cell setup. And you probably could have, you could have picked and chosen anything you wanted to do with. I'm just showing you the spiders because that's what I traded, and I also traded the IWM that had a little relative strength. Not a heck of a lot, but there was something there too. And you look at the IWM here, there was a much bigger move. Okay, this was like a V bottom. All right, so made sense to me. So right in here is when I got a little long, and then I held it, sold some into resistance, and then just like the spiders, I said, you know what, let's see what happens here. If it starts breaking below, maybe it was just a bounce, and I got out of the rest of my IWMs right there. And that was a nice trade. Descending channel for an oversold play into resistance. And this went a little bit further probably than the bears would have wanted, but who knows? I don't know if, how much conviction they have. And then sell off into the close. But now if you look here for tomorrow, did it break today's low or the morning low while the spiders did? No. So maybe it's trying to slow down the pace to the downside. So you go to the daily chart of the IWM. We listed all of these ascending and descending channels, and then when it broke this, and it's into pretty big support. Okay, just filled that void, and then if that doesn't hold, you have a bigger trade into, or bigger support into about 100 or 150. So, if you got short here or short when it broke this ascending channel, covering a little bit into here makes some sense, right? That's the size of this measured move. I think the bigger measured move from here to here versus from this peak to this peak does take you down closer to 100. But if you stick around for the juice, sometimes it gets slippery. As far as the XLE, didn't have much of a rally, at all. It's friggin' scary looking. These are big market capitalization companies, Exxon, CVX, all those guys. This is when it broke here. Just to show you the 200-day, this is when it broke a few different trends, more of the intermediate and upper trends, 821-day, 821-day. Here it broke below the 200-day, and it stayed below it for a week, showing real selling in the energy sector. So that showed you that it wasn't a fake out to the downside to reclaim it like we've seen in the past 2 years. Real selling. So once that happens, the institution says, I'm out of here, and then look at this move to the downside. And there's been some reversals that had no commitment to it, that have knocked out some teeth at traders who didn't measure the commitment. Here was one to the downside. This one wasn't anything, just didn't close in the lows, and now today we close in the dead low. So tomorrow we'll see again. What's the story? It's very stretched to the downside. So if you're still short it, I think you're waiting around for the last man standing on the short side, but who knows? But being long hasn't worked either. So we'll see what happens tomorrow. Same goes for the OAHs. Look at that. Broke below the 200-day, never came back above it, acceleration to the downside. That's what the 200-day means. Sometimes it holds and institutional support comes in and the correction's over, or it trades below and leads the market lower, which is what this group has done. The banks are coming out with earnings tomorrow, so we'll see what happens. It's showing a little relative strength, I guess. It's still above the August pivot, which the spiders are below, and there's a 200-day, so we'll see what happens tomorrow. I think tomorrow is Citigroup and Wells Fargo. Look at this breakout failure here. Shouldn't break out above a prior level and then come back in so damn fast. That just shows you that it was a false breakout. They squeezed some shorts, had people chase. Bad. Then an outside day right here. Broke above this resistance, closed below it. Another sign to get out of Dodge. And then also the 821 day, which is our thesis, where you don't want to be in swing trades when you're below the 821 day or in portfolio approach. At least I try not to be. What did gold do today? Gold, if you look at this capitulation bottoms, and I wouldn't even say capitulation bottom. All I know is, remember we came in that day and the title on one of the CNBC's website was "Sell Your Gold," and then that was the bottom. Then really it broke above this small little pivot, held above it, and it's working its way higher. I don't think you go chasing gold, but it could continue to this prior support, which could turn into resistance. But then the moving averages are still below it. Above it. So money's flocking somewhere. Now it's a little bit above both moving averages. So again, I don't think it's a compelling trade to buy gold here, but it was an active trade if you measured the support to this quick move off the lows. What Apple do today? Apple still, best in breed. It's one of the few stocks above the 821 day. So make sure that continues if you're going to be in it as a trader, as an investor too. It's come a long way and it still looks good. And I think you could stay the course in Apple. All the other momentum names, though, very broken. I got to give it to Laz. He's had a lot of short sell-ups off the charts, and hopefully you're in that newsletter because he's been coming up with so many of them. And I haven't taken them myself. I've just been out of the way on the long side and been, very precise and tactical. One thing today, though, in the morning call, we talked about if Tesla were to break 235, that big gap from Friday unfilled could lead to more downside. And look what happened to Tesla today. And so I got to hand it to Sperling. He got short pretty quickly on the VTF, and some guys had some success. This is the reversal here into the event. Here's your hole in the chart, and then here's your continuation into the 200-day. So now you see what goes on there. I think you also had Netflix short that did play some, catch up to the downside, and which now at this point it's a little off the lows, but still above the 200-day, and that's not a great looking pattern there. Amazon, we said, can get to about 300, and it's pretty much where it sort of got down to. It hasn't been a great fast money trade, but below all the moving averages, nothing really compelling there. Baidu broke its upper pivot, and still, doesn't look great. For a while, it was in this channel with a lot of false moves, and then finally decided to break below it, and still, it's above the 200-day, so it's showing some relative strength, but there's no urgency there. Baba didn't even trade it once today. I definitely donated enough money to this stock, and the last time was here okay, when it tried to break above 90, but look at it. And I'm actually happy. You know, I tried to play it for a trade above 90. It was above there for about 30 minutes, and then it closed below it, and I said, I'm done with it. Didn't do what I thought it was going to do, and, you know, saved myself a lot of pain down to there. Some guys also, I got to hand it to them, got out of Mobley nice and quickly too. Okay, you had this false breakout here, or outside day, tried to break above 58, didn't, and then it sliced below the 21-day. So it changed that trend of following the 21-day ever since it broke out here. So now it just needs time. It's a little off the lows. It just needs to build now. And that's really it, guys. You know, I'm in this environment. I've been pretty flat every night equities for the past week or so. You know, on some of those big reversal days, like we saw with those, you know, when we held the 150-day, I had 4 or 5 positions and a hedge, which the hedge worked, and I also only kept a third on. Really, if I have anything on it, it's in my swing. I'm leaving my day trading account flat. So this way, if something I think is going to happen, we get, you know, side blasted, at least there's opportunity to take the pain of the other account somewhat. And there's been some two-way action, and the volatility is high, and, you know, some volumes picking up. And as a trader, you know, that's what you want. If you complained when we were slowly grinding up and stocks never went down, you know what, this is your tape. And now if you're complaining that we went down too fast and, you know, there's no bounce and there are air pockets everywhere, then you're just complaining too much and you're not changing and you're never going to get anywhere. So complaining doesn't help. Learn. Use your tactics. Use your resources. Gravitate towards people who, you know, have a certain set of strengths in a certain tape. For me, I'm just happy. You know what? Didn't get caught. Made a little bit of money short. I've been tactically making some money during these bounces. At some point, maybe we do find our footing, and then I'm thinking clearly, mental capital is saved, and I get a bigger trade versus just trying to hit some singles and bunting a few singles. You know, but that's a tape we're in right now. Low gross, low net. And a lot of guys tried to be short, and they're no longer even trading anymore because they went against the trend for such a long time. But with that said, we'll see what happens tomorrow. I think we're all trying to pray for a gap down. We'll see. You know, not saying that's going to be an easy trade either. You know, you have the Ebola news everywhere. You still have the Ukraine. You still have what's going on in Hong Kong. There's a lot of headlines going on. Earnings season is going to start. Some guys were like, "Oh, let's just take the longs overnight because we came down so fast in 3 days." I'd rather sit and wait because we're deteriorating and we're accelerating. So I'd rather be a little bit more in control. And if you're in control, you can limit your losses, and you could salvage trades, and you can continue to make some money and preserve your mental capital. So, you know, when it is your type of tape, which any type of tape should be somewhat your type of tape, you know, you'll be able to execute better. Have a great night. See you in the morning.